Hello and welcome to the Cash News Podcast, your go-to source for informative conversations about all things cash and currency. From cash security and payments technology to the cash supply chain, we're here to share insights on the issues shaping the world of cash today. Join your hosts, Tom Meehan, Sean Ferrari, and Brad Moody as they dive into the latest trends, strategies, and technology. This is the Cash News Podcast. Now, here's Tom, Sean, and Brad.
Hello and welcome, and thank you for visiting another episode of the Cash News Podcast. I've got a very distinguished friend and person here on the call. Jason, if you would mind introducing yourself and tell us a little bit about who you are and what you do.
I don't think I've ever been called very distinguished before, so thank you for that. Jason Siemens, I'm president and CEO of NamSys. We are a software company that specializes in software as a service applications for cash transportation and processing. So happy to be here.
Well, thank you again, and again, thanks for your time. And I just thought that it was Jason and his very relevant in the marketplace, specific to cash and cash processing for banks, armored cars, retail, all kinds of people. So, and I've known Jason for close to a decade now, really. And I just, for someone that really has a pulse on what's going on in the market, I just thought it would be a good idea to have Jason as a guest to talk about what he's seeing as far as kind of emerging trends and cash usage and, just really the basis of opinion. So, Jason, if you can, just give us a little bit about what you're seeing in the marketplace and how things have changed, or any innovative products that have come out there that really have kind of swayed consumer opinion about payments.
Yeah. So, as a software company, we work with a lot of CIT companies, especially regional CIT companies in the US, but we also have a global perspective as well. We have a number of users in the Caribbean, Mexico, Europe, Africa. And so we can see all their different perspectives on cash. I think for today we'll probably focus more on the U.S. market. So our software ranges from monitoring smart, safe, and recyclers. So we're involved with kind of the retail end of things. We have software that helps CIT companies transport the cash, and then we have software that processes the cash in cash centers and cash vaults as well. So we're able to see kind of the whole end-to-end view of things. And I think the overarching trend lately has just been, I think the theme has been flexibility, where the retailers, have traditionally been serviced by, a CAT who shows up there, on a Tuesday and a Friday or at a certain time of day, and just picked up their deposits and change orders or service their smart safe. And I think with cash usage changing, a lot of these retailers are just demanding more flexibility. They want more change on demand. They want faster access to credit. They want more just-in-time service. And it's the same. It's like any industry, right? We all get used to the advantage of like Amazon Prime, and right, like the software industry was Google. When Google came out, it changed the software industry because everyone was like, suddenly it was like, why is my report taking 5 minutes to generate when Google can scan the entire web and give me the results in 0.02 seconds? Like, remember when Google had that little,
that's right, the record
million results in 0.2 seconds? Yeah. So, it just kind of upped the standard. And I think things like Amazon Prime have just changed people's perspective, because they're asking, okay, I can order like a patio set from Amazon and it's on my doorstep tomorrow, but I can't order a roll of quarters. Like, what's up with that? So I think as the industry just has been kind of famously archaic. The use of carbon copy pads to track millions of dollars in cash shipments is still ongoing, right? In a lot of places, a lot of companies. even, the Federal Reserve, up until recently, was pen and paper and still is in a number of cities. I mean, they have their e-manifest program, but it's always been a few years behind everyone else. So we're trying, our goal, the thesis of our company is that we want to make cash more efficient so that it can remain competitive. And because it is under pressure from multiple angles, and it does need to be supported because it is vital to national economies. I think what people fail to recognize a lot with cash is they go, okay, it's just, so I'm going to have cash or I'm going to have US dollars in my bank account, right? What's the difference? But if cash actually did disappear, then the use of private money might kind of take hold and dramatically change how the economy, operates. That's because it could change the currency basis for payments. And in North America and the United States, we're kind of insulated from this concept, right?
Sure. Yeah.
Because it's just taken for granted that, well, the greenback is not going anywhere. But in a lot of countries, they use the US dollar as their main currency.
Right. Yeah.
And even if it's outlawed by the country, by the government, it's still kind of the black market. There's a black market for it, or shadow market for paying in these currencies. And the other thing that protects the US dollar is just so much of it is used internationally, right? But if you do have forms of private money going up, it could basically impact the Federal Reserve, the central bank's ability to manage the economy with interest rates, and it happens pretty quick, I think, in a lot of cases, right? If you have inflation it takes off, and there's not enough curbs in place, then you might have people saying, well, maybe I don't want to have my savings in my domestic currency. Maybe I want to have it, on my phone. Maybe, I'm going to store, euros on my Apple Cash account instead of US dollars. And all of a sudden, the currencies that are most popular to transact in start shifting. It's not that, well, it's a long time ago, but if you originally, before the Federal Reserve, before national banking, everyone printed their own dollars, right? You had banks that just made their own dollars, and if you took a $5 bill from Texas and tried to spend it in Chicago, it wasn't worth $5, right? We're going back to the 1850s. But there of course is that, there is that possibility of that happening where, Apple Pay or, and your Google Wallet all of a sudden doesn't necessarily store just US dollars. The other, phenomenon is company towns. They used to issue their own currency, like the mining companies would just pay their employees in their own currency and say, well, spend it at our stores, and you're going to pay for your rent in our coal miner dollars. But there's, what are the possibilities that Amazon could start doing that and say, we're going to start paying our employees their bonuses and Amazon credits, and everyone uses Amazon, so it's effective. It's pretty fungible.
I was going to say, it's a brilliant concept when you think about it. I'm sure that from a tax basis perspective, it's different, but it's actually very interesting. Very interesting.
And if you take it a step further, you go, all right, well, a lot of the stuff I buy from Amazon is actually manufactured in China. So should the basis for these credits not be pegged to the Chinese yuan rather than the US dollar, right? So that we eliminate that currency conversion and the currency risk that Amazon's taking. I mean, there's a lot of things that can affect cash pretty quickly. Um, I'm reminded of record stores, right? I had a friend who worked for a record store, and this was right when MP3 players was coming out. And I was always kind of like an early adopter, so I was like the first one with an MP3 player. And I said, man, you're like, this is going to be devastating to your industry. And he basically said, no, like the people who come to the store, like they want to browse the music, like they sit there for like an hour and they browse through the records, and that's like they want to see the cover art, like the cover art's really important, like, and they want the little lyrics card,
liner notes and everything
liner
else.
notes, like they love that, like they're not going to give up all that like for MP3s. And he less than a year later, the store was closed and he was out of a job. And I see a lot of parallels there. It's a very different scenario. Cash and CDs or records are very different. But if you listen to a lot of the arguments that come out from cash proponents saying, here's why cash is great. Not that they're wrong, but it's eerily similar, right?
Sure.
Like, cash is private. You could say, well, records are private, CDs are private, because you didn't have to log in to buy a CD. I could go, buy a record. No one knew I bought that the latest ABBA record, right? Whatever. I was embarrassed to buy.
You're Canadian, so let's say Rush. Let's
say Rush. There you go. Perfect example. They'll say, I could lend my records, my tapes, my CDs to my friends, right? And you can't do that with streaming music. So that's a valid option. But same thing with cash. They go, well, cash is transacted at par. I can hand you a $20 note. It's still $20, and there's no fees deducted from it. So that's kind of similar. CDs, operate offline, right? Like I don't need an internet connection. Likewise, cash operates in disasters, doesn't need an internet connection. So, but at the end of the day, like most consumers are, very wisely saying, I don't need to have cash in my wallet.
Right.
I'm one of those people, right? Like the last time I routinely had cash in my wallet was when I got paid by check. And so, we had a small business. We still are a small business. And so, once a week, you go hand out all the checks and physical checks. And you go to the ATM, you deposit the check, and inevitably you'd be like, all right, I'm going to take out some cash while I'm here. And then you use that for spending throughout the week. And it was at the time, it was more convenient than debit and credit because high-speed internet didn't exist, right? I'm aging myself, but right, like you had to wait you went paid by debit in a convenience store, and you'd have to wait for the dial-up modem and hope the fax machine wasn't using the terminal, the line at that time. And as soon as we started getting paid with ACH, and as soon as debit started getting the high-speed internet started taking over and just penetrating stores, and it just became like kind of an inconvenience to go to the ATM to pick up cash for the week, and so you just kind of did it as a shortcut. And I think it's just the reality of
right.
Most people get paid with a salary, goes into their bank account, and they're happy to spend it off their debit and credit cards. But there is a portion of the population that are just consistent cash users, right? And it goes outside of just demographics. It's not just, if you're over a certain age, you spend more money in cash. Yeah, yes, but I kind of disqualify that argument because it's like, well, eventually those people will not be spending money, right?
Right. That's true.
And it's just time, right? And so we have to, I think, look at the use cases for cash that aren't necessarily like the tradition, well, not the tradition, the real world, the real uses of cash, right? And things like people use it to maintain their privacy. Yes, people use it to buy what's the word I'm looking for? They're unmentionable things, right?
Okay.
They use it to evade their taxes. They evade business taxes using it. They do all these things. They gamble with it, right? Like,
Sure. Yeah.
And what we sometimes I feel in the industry is we kind of like want to not talk about that stuff because it's like, well, that's kind of like the seedy underbelly of cash. Let's focus on all the positive aspects of it. But I mean, it is kind of in contradiction. It's not helping us by saying, we're just gonna pretend like everyone wants to go to an ATM all the time because they're not, right?
Right. Well, and I mean, you look at the growth of, especially after the onset of deposit accepting ATMs, how, that now banks have thousands and thousands and thousands of ATMs. You've got, I remember, there's one banking center that I remember was in Boston Commons area,
Mhm.
You walk in the lobby and there was legitimately 15 ATMs. Like, why do you need 15 ATMs to run that cash usage? And so you look demographically, and it makes a lot of sense, right? Because there's a lot of cash people that use the cash that's around there. So they're going there and they're cashing their on us checks.
Check, yeah.
And they're getting the cash from the banking center, or they're depositing it, and it's interesting how they transact it. And I've mentioned a couple other times is with a partner of ours in northern Alabama, and they were showing us the credit union across the street had like 20 something ATMs, drive up ATMs. Like, what is going on? And regionally, people use cash in northern Alabama. So North Florida, northern Alabama, a lot of parts, Georgia, not necessarily the rural, the red states, but people where cash it's a culture, right? They've always spent cash. Their parents spent cash. They got paid tips in cash, and that's how they operate inside outside the system. So it's interesting to see how people and I think you're dead on with I love the CD analogy, right? Because it is changing, or should I say evolving. And it's I find myself in the same rut of I've had the same, let's call it I think it's $43 in my wallet for a long time. And I'm like, I've mentioned several times, but the Jay Swirsky book of, The Power of Cash, it's a muscle memory thing. So where we see and we'll talk about a little bit about the Payments Coalition portion of it, the survey.
Mm-hmm.
We've seen a lot of the big advocates out there that say, yes, I don't need cash, I don't want cash, but I think we need to have the payment choice to have cash.
Yeah.
Because as you mentioned it, you're dead on with in the event of a catastrophe or a power outage or something that happens. Next thing you know, people aren't going to do things, or they're going to not know how to transact. They don't know what a calculator does. They can't calculate tax. The fill in the blank.
Mm-hmm.
But it's an important segment of society to have the option, right? And I do believe that the Fed rates are directly tied into that in some extent. That once there's a monetary value of cash in a deposit forum, then people, I think, will start using cash less. But and I think about, I'm an American, right? And I think about how people love their points and how they're incentivized to use credit cards.
Yeah.
And I was talking to somebody this past weekend, and we're restaurant tab, and they're like, "Oh, I got it," and and they're like, "Hey, your portion is say $40." They're like, "Zelle me," or whatever, right? And I'm like, that was easy. And the whole deal was that they wanted to put it on their credit card because they wanted the points. I'm like, do you know how much money you're paying in points in comparison to the value that you're not going to, unless you pay it off right away? Like, I just thought that was an interesting conflict. I didn't know if you had any perspective on that.
Well, with points, certainly, yeah. I mean, I'm a big fan of it. I put every purchase through a credit card that I can. Pack of gum, a credit card. But for most people, yeah, that makes sense. I mean, as a on a kind of like macro level, it is though. the kind of upper end financially of society that is essentially like stealing from the people who don't have those points cards.
That's true.
Because rewards cards usually come with an annual fee, higher, usually some higher interest rate, but often it's like you qualify for them, right?
Yep.
And so if you've got a lower credit score, then you're going to be paying, because someone's paying for this 1-2% surcharge premium, right? So it's being funded by the people who don't have those points cards, so that the upper echelon can be rewarded. Which,
right?
I don't. You can say it's unfair, but it's that's kind of how it's working right now.
Right. I mean, I hate to say it, but when I travel, all the airline points and all the kind of stuff that I have and that I've earned from traveling around, and that's not free. And I think you're right. It's come from you can't necessarily call it usury or predatory, but it is the folks that can't pay their bills and they're paying 25% interest because of whatever purpose on their credit card. And it's an interesting conflict, to say the least.
Well, for people, for a lot of people that have to have tighter budgets, cash is one of those very legitimate use cases where if you take your paycheck and you go to that machine, you deposit it, immediately take it out in cash, or go to a check cashing store, right? Take it all out in cash. You're not at risk of NSF fees, overdraft fees. You can select who you're paying. A lot of people, they got to decide who doesn't get paid. And if everything's coming out of your account automatically, then you don't have that control, right? So a lot of people will take out their entire paycheck in cash at kind of 1 minute after midnight, so that their car payment doesn't go through, but they can pay their rent. And there's a good portion of society, and unfortunately, maybe an increasing portion of society that is operating, under those constraints. But again, it's one of those portions of the population that is forms kind of one of the foundations of cash usage. That isn't one of the seedy uses of cash. It's very above board, and it's very utilitarian, very practical.
So one thing, I mean, your business is obviously in the technology space, software as a service, and that's dealing specifically with the cash and transit industry and banking, and I know you don't have access to customer data. That's not what I'm asking, but from the people that you're dealing with, your day-to-day prospects and current clients, is there any kind of need that's popping out that they have said, we see cash volumes are up, way up, but are you seeing anything that they're like, cash is a significant portion of our business, or anything that's coming up that you're being asked to take a look at?
Well, the one of the things that's easy to forget about cash is that the denominations don't change. So cash in circulation sort of just naturally goes up with inflation.
Yeah.
And so if you're a business that's processing cash and you're getting paid by the note, right? Like, you can expect the revenue from that business to go up every year. Just because unless given that if cash as a payment choice stays the same, people just naturally spend more money. And so what you're seeing is a trend at the ATMs is people are taking out. There's far fewer transactions happening, right?
Right. It's true.
But the value of the transaction is much higher. So it used to be $100, now it's $200 plus, I think. Right. And that is actually affecting the ATM industry,
right?
Because their fees are flat, right? They don't charge a percentage of the money you take out. So you're emptying the ATM, but you are paying a couple dollars. Whereas if they spread that over if they rewound 10 years, that might have been spread over 2 or 3 transactions.
Right.
So yeah, there's enormous pressure. Yeah, enormous pressure on the ATM side of things, but the actual cash volumes, the cash volumes are rising,
Yeah.
and our CIT clients are benefiting from that. I think they're winning some business from the national companies as well,
Sure.
just for other reasons. But yeah, the cash is definitely not going away. And one of the parts of our thesis as a company that I tell investors is, if you're a business and you're maybe 15 years ago you deposited $3,000 a day in cash, and now you're depositing $600 a day in cash. The cost to transport that cash is the same, actually probably much higher than it was 10, 15 years ago. The cost to process it is usually pretty much a flat fee for the deposit. It's not on the note or value. So your relative cost of cash keeps going up, and it's now it used to be super cheap. It's one of those things. It's like economies of scale, right? Like
exactly right.
If you have to employ someone to count it 3 times, and you have to pay to ship it to the bank, you have to pay to get it deposited into your account, then it just becomes more and more expensive. So what we're trying to do as a company is to find ways to reduce that cost of service, right? To make it cheaper for the CIT to service that store, to make it more efficient for them to process it so they can charge the client less and be competitive. Yep. And so, because otherwise, right, like if their cash deposit keeps going down and they don't have ways to deal with it, then there will be retailers that simply go, this isn't viable. And that's, I guess, where the Payment Choice Act and Payment Choice Coalition comes in. And I think it's a legitimate cause, is to basically try to, I guess, encourage retailers to continue to accept cash even when it may not be an economic positive for them. Right. Like,
well, I guess the risk there, the value is not getting the transaction, right? So you're not, and you see a lot where, people spend money in cash, especially QSRs and convenience stores and low value stuff. So, the risk of saying, hey, sorry, we're not going to allow you to do this transaction, their revenue goes quickly down. And what's that difference in cost between going down in price and then getting that?
Yeah, it's good. I mean, I asked a retailer this at a conference last year, and so they're a really well-known kind of brand in the restaurant space, sit-down restaurant space, and their cash payments were at like 7 to 9% of our revenue. And I asked her, at what point, like, where's the tipping point where you go, now it's 4%, 3%? Like, at what point do you just go, it's easy, it's cheaper for me to, just eliminate it and to just go cashless, and update my store operating procedures and reduce my hourly time. Like, they probably spend an hour, 2 hours a day just managing cash. Eliminate that cost, eliminate the ATM transfer fees, eliminate a lot of the banking fees, and just go cashless. And she couldn't answer the question. I mean, we are at a cash conference too, so
right.
No one wants that.
Little influence there.
Yeah, you don't want to anger your audience, but sure, it's just obvious. I mean, there's a point where they just go, this doesn't make sense for us anymore. And I think a lot of retailers too have used it, cashless, as a means to select their customers a little bit. Like, if you get into downtown areas, you'll have kind of like more high-end, like, lunch places that have gone cashless. And it's not because they don't want to accept cash. It's a way to basically exclude, the poor people from their store.
The cash. Yeah. I still wonder at what point, and again, QSR and convenience stores kind of items, little bit different, but when they're paying 2.5%, 3% also on top of their price, at what point are they just going to raise all the prices 3%? And the credit card transaction fees, right? So it's an interesting conflict, and who knows? We can boil the ocean today, but it's going to take a while.
Yeah. Well, the payment choice. I mean, the Payment Choice Act and Coalition. Like, I recognize that there's merits to it, and a lot of states have passed laws in support of it. There's some practical limitations, right? Like, most of the time they go they say, well, you need to accept cash, but we're not going to force you to have change on hand. So you can take a cash payment, but the consumer's probably going to have exact change. Like, if they don't, then you're not in violation of the act, because it doesn't require you to have change. Certain limits on like the amount of cash that you're going to, it's going to force them to collect. And I mean, frankly, if you look at it sort of like supply side, meaning that like cash as a payment as a cash payments as an option, and the demand side is consumers want to spend cash. I think that if you look at it right now, there's not a lot of retailers out there that are like have gone cashless. Right. There's a trend, but it's still like 5%. I think is the number I saw. So 1 in 20 stores.
So interesting enough about that, I've mentioned on a couple other podcasts and things, but a large part of our business is obviously on plastic bags, right? That's our core competency. We actually are getting a lot of customers that are coming back to a more traditional daily deposit and with armored car, or the is such low cash that the store manager or whomever will go drop off cash, right? Yeah. Because they realize that the value of the provisional credit that they're getting from the bank just isn't there. So they're seeing like, wow, I only have $700 a day in transactions of cash.
Yeah.
If I deposit that plus the treasury fees and everything else that's included in that, it's costing me more than for me to walk it across the street to the bank, or for me to store it in a small safe and have an armored car pick it up once a week. So we're seeing a lot of that, people coming back, like, they thought from a treasury perspective, from the bank or armored carrier, that, hey, this is the greatest thing ever. I'm going to save so much money in reduction, and it just doesn't formalize. So I think it's an interesting conflict of, is it a bank? I hate to use the word greed, but is it a bank issue where the banks have really clever sales and but it's just not there? I think it's for the right customer. I don't know if it's for every customer.
So I absolutely agree. And we do, we drive a lot of daily credit through a smart safe monitoring application. Sure. And it is definitely one of those tools that is not right for everybody. I mean, if you work back, like you said, if you work backwards the number and go, you're paying $150 in fees for your daily credit program for $3,000 in deposits. Right. It's like basic, and you work it out to an APR, annual interest. It's probably over 30% interest that you're paying on that money, right? So it's a very lucrative product, right, to do. But if you're a retailer that is, a lot of retailers are owned by like private equity. They've got like debt to finance and interest payments to make. And so, the businesses that are really leveraged, it's just kind of like another credit product, I think, that keeps them above water. But for a lot of retailers, it's not the right option. And I think, I think more and more retailers probably coming to that realization. Yeah, that they're doing the math and saying, well, I could, if I just put this use my line of credit instead of, this daily credit product, it's cheaper overall. Yeah, absolutely. Yeah.
Well, Jason, I appreciate your time, and this is some good conversation, and you're echoing some things we're hearing in the market, and I think it's value add. And again, you're a staple in the cash community for sure, and you guys provide a great service. I really appreciate your product.
Thank you.
We have a lot of the same clients, and I've always heard extremely great things about you and your company for sure. So I appreciate all you're doing for the industry for sure. So on that note, again, I hope you have a fantastic day. For all those that kind of listen, we'll be sending this out through our socials. And then, of course, you'll see it on the video itself on YouTube. So I appreciate your time. And Jason, again, thank you so much for your time.
Thank you for having me. And I hope to be back sometime.
Absolutely. And hey, we'll see you in May in Dallas at ICOA. So I appreciate it.
Thank you.
Thanks for listening to the Cash News Podcast. We hope you found this episode insightful. Don't forget to like and review us on iTunes, Spotify, Stitcher, or wherever you listen to your podcast. Follow us on LinkedIn and Twitter, and be sure to visit us at thecashnews.com to stay up to date with the latest on the world of cash. Thanks again for listening to the Cash News Podcast.